you're watching Left, Right and Centre. I'm Nidhi Razdan. We may all be focused on the exit polls and the election results are only in a couple of days, but perhaps an even bigger challenge is emerging for the government, the economy. The Russian invasion of Ukraine has created absolute chaos on the stock markets around the world, energy prices, and is bound to hit all of us here in India with high fuel prices to begin with and perhaps a long-term slowdown in growth. Well, sliding for the fifth consecutive day, the rupee depreciated by 7 paise today to close at a lifetime low of 77 against the dollar. It was weighed down by surging crude oil prices amid the Russia-Ukraine war. So why has the rupee weakened? Well, rates are likely to increase India's oil import bill. India imports nearly 80% of its fuel needs, and the rupee is now one of the worst performing currencies among emerging markets. The markets also ended a little bit higher today after 4 sessions. The Sensex gaining 581 points today, the Nifty gaining 150. Experts say that a strong recovery in export-oriented sectors like IT and pharma is what drove the markets up, at least for today. But overall, the sentiment is certainly very, very worried. In the last few minutes, the United States, the White House has announced that President Biden will be putting sanctions on Russia's energy sector. The UK is expected to follow as well. That is expected to worsen the energy crisis, at least in Europe, the United States, and perhaps other parts of the world as well. So how should India be looking at this economic crisis? What is the impact going to be? Joining us first on the program tonight, Dr. Amit Mitra, Principal Chief Advisor to Chief Minister Mamta Banerjee. He has been Finance Minister of West Bengal. Dr. Mitra, how worried are you?
Well, you see, Nidhi, first, what is the state of the economy as we get into this crisis that you've just described? Unemployment, I'm talking about the common people, 35 million people in the month of February before this hit us. 35 million, 3.5 crores. Inflation, something that common people are deeply affected by. Consumer price index hits the red line of 6%, 6.01. And wholesale price index is close to 13%. 13%. So unemployment, inflation. No country in the world has had both together. This is called stagflation, crisis of the first order in macroeconomic terms, due to wrong macroeconomic policies, which I've repeatedly said, unlike other countries in the world. Stagflation. Please remember stagflation threatening us. Third point, for foreign institutional investors, would you believe, have pulled out 22,000 crores net. That's what they bought and what they pulled out net. 22,000 crores in 3 days. They have dumped risk assets, sell off in equity. So they are pulling out. And on top of that, there's a strong dollar, which is attracting them. Very dangerous for us.
So what is the impact going to be then on all of us, regular folks?
Yes, obviously, the key is inflation and unemployment affecting the regular folks. Nobody is talking about that. In addition to that, the foreign institutional investor pulling out is a very bad sign. That means the confidence in India, the way that it should be, is beginning to get shaky. They are going back into the dollar market. And what is important is that the rupee has not only fallen to its low, if the oil prices per barrel goes to 130 now, dollars, it is possible that rupee will go to 80 rupees a dollar. And trade deficit, when rupee rises like this, you have a serious problem in the trade domain.
So, Dr. Mehta, if I could, sorry, interrupt and ask you that if you had to give the government today a couple of suggestions on a couple of constructive suggestions on what can be done. It is obviously, as you are saying that, the macroeconomics isn't right, but there are also things that are not in the government's control at the moment, which is the situation with regard to Russia. So what can they do, firstly, with regard to the rupee and anything else you suggest?
Yes, I think, first of all, when I say macroeconomic policy, I don't mean it today. It's a wrong policy over 2 years, we've repeatedly said. When India grew at negative 7.7%, West Bengal grew at 1.2 positive% because of the macro policy. Now let me go to constructive things they can do, as you have asked. Reserve Bank of India can sell dollars. They haven't done it so far. Why? Because we have a forex foreign exchange reserve of $631.53 billion. $631 billion. One thing they can do is to sell dollars, which immediately restrains the rupee from falling further. My fear is Reserve Bank may also increase interest rate to control inflation. Now, the moment they do that, they're going to hit growth, economic growth, which then translates into greater unemployment and all kinds of other issues relating to economic growth. Now, my submission is there's another one. Oil reserves in India. You know, we have hidden oil, as all nations do, for a bad time. You'd be surprised to know we have 74 days of oil reserves, Government of India and the oil marketing companies. So one thing that United States did at one crisis point of the Gulf War was release some of the oil reserves. Now, what is very striking is...
Are you suggesting that India do the same? That India should release some of its oil reserves?
Yes, what I'm submitting to you is petrol diesel prices have not been low, have not changed in 4th of November. Why? Because there's election. So this electoral politics has stopped it from natural rationalization. I think India can look at some amount of releasing of reserves from 74 days. It can go down to, let us say, 60 days, which is, by the way, much more than United States has. So RBI obviously can sell dollars. We can use our oil reserves a bit because this is the crisis point. And most importantly, go back to demand stimulating macroeconomic policy, not cutting corporate taxes, which poor corporate guys end up, because there's no demand in the market, end up as profit in the middle of COVID.
Okay, Dr.
Highest
Mitra,
profit in 4 years.
Dr. Mitra, interesting the suggestions you've given, and certainly we will take those because we do have a member of the Prime Minister's Economic Advisory Council joining us next. Thank you very much, Dr. Amit Mitra, for that and for your perspective. Let me go straight across to Mr. Nilesh Shah, who is a member of the Prime Minister's Economic Advisory Council and Group President and Managing Director of Kotak Mahindra AMC. Professor Pranab Sen, the former Chairman of the National Statistical Commission, also with us tonight. And the political voices joining us this evening, Shama Mohammed, spokesperson of the Congress Party, and Mr. PKD Nambiar, who is a supporter of the BJP and an analyst. Mr. Shah, to you first. I'm sure you heard what Dr. Amit Mitra was suggesting there. Would you broadly agree that these suggestions are doable, selling of dollars by the RBI, releasing some of the oil reserves that India has in order to offset the hike in fuel prices?
I think the currency should be best left to the market. RBI has very time-tested policy of managing volatility, not the direction. This strategy has worked us for years and decades, and we should let market determine what is the fair value of rupee. RBI should focus on ensuring that the volatility is minimum. If oil prices goes higher, our current account deficit widens. A 10% increase in oil roughly means 30 basis point increase in current account deficit, about 40 basis point increase in consumer price inflation, and about 20 basis point degrowth in GDP. Now, we should allow RBI to determine what is the volatility acceptable to them and let market determine what is the fair value of rupee.
Mr. Shah, could I ask you that in terms of the oil price hike, which is what everyone's kind of now on the edge about and waiting for, what do you see as the possible hike that consumers could be dealt with at the moment? Because the figures at the moment floating around in the media range from 6 rupees a litre to 12 rupees a litre.
My feeling is that the burden of higher oil prices will have to be borne by consumers as well as government as well as corporate India. There should be some reduction in center as well as state taxes, as higher oil prices are bringing higher taxes to the government, and there should be some sharing of burden with the consumers. As Dr. Mitra mentioned, the consumer demand is on the weaker side. Economic activities have picked up, but MSME sector continues to remain under pressure, and hence sharing of oil price burden between consumer, government and corporate will be ideal distribution.
Okay, all right, Mr. Shah, what you're saying is important. As I said, you're advising the Prime Minister's Economic Advisory Council at the moment. Let me get Professor Sen in for a comment on this. Professor Sen, there is a concern already because India's economy grew slower than expected in the December quarter at 5.4%. It has pushed down the full year estimate to 8.9 from 9.2 previously. All of this now happening at this time. What impact do you think that's going to have on our overall growth now in the year ahead?
Nidhi, the situation we are in at the moment, these numbers are fundamentally not that important. What is important are the expectations that are building up. I mean, I think this is a point that both Dr. Mitra made and also the point that was just made by Nilesh. The thing is, we are in uncertain times. And in uncertain times, all of us take calls about what we think is going to happen in the future. And we act upon that. We really do not know how that's going to play out. Because the kinds of moving parts that we have at the moment, a lot of them are giving us very, very sort of conflicted information. Now, in a situation of this kind, I think the really important issue is for the government to lend a degree of stability, not react, overreact, be gentle about it. Nilesh talked about, for instance, the issue of allowing the rupee to find its right point. I completely agree. But the point is when? If you do it too quickly, it can be extremely disruptive. If you do it too slowly, people will continue to expect that oil prices will rise in the future as well. You're drawing a very fine balance. And that's what the government has to take into account. It has to really calm down and soothe the kind of uncertainty that you and I as citizens have. If that isn't done, then taking any kind of a call on what the economy will do is extremely difficult.
Okay, I think you've given us a good perspective, Professor Sen, of, as you said, times of uncertainty. However, Mr. Nambiar, I do want to ask you that one of the problems is that, oil prices have not been hiked now for several months because we have been in the midst of assembly elections. Firstly, technically, the government shouldn't be determining when oil prices are hiked or slashed, when it does rarely slash. But, should electoral politics come in the way of rationalizing what the fuel prices should be?
Well, Nidhi, I was expecting this question when I got to know that this is a topic we are going to discuss, that how come the politics is going to be determining the prices of the fuel when it's skyrocketing globally. It is true, and we must accept that politics do play a role. If I say that no, it doesn't play a role in an electoral politics, a government's decision, it do play, and it has always been like that since independence. So let me admit that, and I don't think this government is also an exception to it. Now, coming to the second part of it, the economic reality of today. The global scenario no economy is neutral today or independent. It is a connected economy. A global scenario today is very volatile and very, very dynamic and evolving. I think there is no doubt that the fuel prices in India is going to change, whether it is 6 or 12 or 15. The time only will tell us in another few days' time. But only one thing what I request through this program today, both the union government and the state government needs to really work. I always call that the fuel taxes are like a tax terrorism in India, because we have one of the highest taxation when it comes to the fuel. I believe that both state governments, I always repeat this statement, whether irrespective of any state government and the central government, we always try to put everything on the central government, and when it comes to the fuel taxes, both the governments, union and the state government, needs to really burden the overtax or the over money which they are supposed to collect when the prices goes up. If they reduce it, that will be a little bit of soothing for the consumer like you and me. I think it's an evolving situation and global challenges from the last 2 years. I have never seen heard even a single economist coming up with a real solution. And when you were asking Mr. Amit Mitra, what was the solution here? And it was a wonderful question you have posed on him. What is the real solution a opposition economist or a people do have? Nobody has got a real solution in front of anyone. I think,
but it would be nice to not. I know you said that all governments control fuel hikes, and thank you for your honesty. But it would kind of be nice if we didn't all have to suddenly pay 20 rupees more for petrol or diesel, or 12 rupees, and it was gradually increased over a period of time, and we have just stopped doing it because of elections. Surely you would agree that that needs to change.
Absolutely, but Nidhi, but we are speculating right now because we don't know whether the government tomorrow the prices are going to be 15 or 20. How do you?
Well, they're going to go up. Let's not kid ourselves. They're going to go up.
No, I'm saying that because you see, I'll tell you because it's about it has touched $139 per barrel a few days ago. Now it has come down. There may be, it's an evolving situation. It may come down to 120 or 115, or then the burden may also come down. So I think, yes, it is going to be a major change is going to happen, and this will also impact everybody's pocket because as Nilesh ji was talking about, a 10% price hike means a 10% is going to be our CPI. I mean, consumer price index, I mean, inflation is also going to change.
Okay,
but let's wait and see that it will not really affect all of us.
Well, I appreciate that you are being upfront about that and you're not shying away from saying that. Shama Mohammed, again, I would like to ask you, obviously, I know the Congress will have criticism, but again, constructive suggestions. Is there anything that the party would like to suggest as the principal opposition that, this is what needs to be done to contain this? We're all in a crisis right now.
I'll tell you that, Rupee. Give me some time, please, since you've given all of them time. Now, we have to understand the economy is not what it is today because of COVID. Before COVID came in, the GDP was 3.4. Then we went down, and now it's unbearable because of this Ukraine-Russia war. Now, let's understand one thing is, how do you increase demand? You need employment, you need to have more exports, and you need private investment. But when the rupee has fallen like this, what happens? The more amount of money we need to buy petrol or oil because we buy it in dollars. So what's going to happen tomorrow? RBI is going to increase their rates. When RBI increases their interest rates, what's going to happen is there's not going to be any private investment. I heard Mr. Mitra saying that private investors removed 22,000 crores in the last 3 days. Of course, we are one of the worst economies. Now, you asked, what can we do? I'll give you two examples when before petrol was deregulated and after petrol was deregulated. In 2008, we had the worst economic crisis. That time, petrol costed 98 to 140 oil per barrel, dollar per barrel. Okay, but we were selling it at 50 rupees. That is before it was deregulated. After deregulation in 2014, when the price of oil was $108 a barrel, we were selling petrol at 71 and diesel at 56 because the excise duty was 9.2 for petrol and 3.4 for diesel. Now, what I don't understand about this government is they keep increasing excise duty. They know the situation is very bad. There's no consumption. Exports, anyway, there's no demand around the world. Why don't they reduce the excise duty? If we could do it, why can't they do it right now? And the other important thing is, this government is only about shoring up revenues. They just want their revenue and keep the fiscal deficit at that spot. You know, in January, they collected a GST of 1,38,394 crores, which was 15% higher than last year and 25% higher than pre-COVID times. So if they can have a revenue coming in from there, when the petrol prices were low, since we deregulated, when it was $50 a barrel and we were still paying 80 rupees for petrol, where did that money go? Why do they keep this revenue? What are they doing it with this? So instead of just shoring up revenues, they need to, stop unnecessary schemes like this Central Vista project, all those Prime Minister ka ye yojana, wo ye. They need to create employment. And right now, what I would like to advise the government is not increase the excise duty. They can do it. If the Congress party could do it, they can definitely do it.
Let me ask the two last comments from the economists here. Mr. Shah, is cutting excise duties an option? Is that something that can be done so that we don't get so badly hurt?
As I mentioned, Neeti, there are too many moving parts, and we'll have to share the burden between state government, central government, consumer of India, as well as corporates of India. We have fiscal space. We have monetary space, and our inflation for 6 months running is lower than American inflation. This has rarely happened in our history. So we undoubtedly will have the pain of higher oil prices, but we are in a far better position to absorb that pain.
Okay.
Nidhi, can I just tell one point?
Yes,
Nidhi?
yes, go
Just
ahead,
one
Shama.
point.
Sure, Shama
Yeah.
Mohammed, go ahead.
The thing is, we are all paying a lot. You have to understand where the poor is going. 400 rupees to 900 rupees gas, petrol, where inflation is going to skyrocket. What Mr. Modi can do, he keeps saying that we are a big power right now. We have abstained 3 times. Just like Naftali Bennett went there and spoke to the Putin, the president of Russia, I wonder why can't Mr. Modi go there and diffuse the crisis? That's what he needs to do, but he's too busy in UP campaigning. That is what the prime minister keeps saying. We are this superpower. We are this big power. Go to, just like the Israeli prime minister went, go there and diffuse this crisis. The oil prices are going to go down. That is what Mr. Modi needs to do at this point of time. Why is he sitting there? Because he wants to win elections. His thinking process is very small.
Mr.
Not the prime
Nambiar has a response. I'm afraid, that might be above anyone's pay grade at this moment about why the Prime Minister is not personally going to intervene and mediate. But Mr. Nambiar?
Is that question to?
Yes,
I couldn't get you.
Yes, I saw your hand raised. You wanted to say something.
I wanted to say only one few factual corrections. One is that today India don't buy the oil from every country on dollars. We have pact with many Middle Eastern countries wherein we buy it through Indian rupees. One. Number two, as I say, you need to understand the economics do not work on TV panel. The panel discussion. If the GST economy is moving very fast, our economy is moving very fast. It is one of the fastest growing economy in the world. Today we are a superpower because we are. So it's not because of Mr. Modi alone. It's all because of the 135 crore Indians. I think let us be proud that rather than mocking on that we are a superpower, let us keep telling that we are a superpower. It will give us more and more energy. What we need to discuss in sessions like this, that today after 70 years later too, why we are 85% of our fuel dependency from import. Why the Congress government, subsequent Congress government,
so
60 years could not make it 50%.
We will become Atmanirbhar in energy also?
We need to be Atmanirbhar. 85%, come on, 85%.
Why don't you cut
we
the
are
excise?
still after 70 years.
One moment.
Also dependent
I would like to get
on
Professor
fuel
Sen.
import.
I would like
Nidhi,
to just get
you can
Professor
put
Sen
excise
for one
below.
second,
I
Shama
can't
Mohammed.
take you with right
Professor Sen, just on the point that Mr. Shah was making earlier, that he says that the Indian economy is in a much better position. Yes, there will be pain, but we are in a better position to withstand this pain today. Would you agree, or are you going to say that it is still too early to say that?
No, Nidhi, I don't think there's any doubt we're in a better position to withstand this. The point is, how do we handle it? That's really the issue. We may have the buffers available, but are we going to use them in the right way? So you've got this whole discussion where we are talking about raising oil prices in the country, right? It matters a lot as to the manner in which it is done and on what. So for instance, just to give you a very simple example, if you raise petrol prices, okay, petrol prices actually falls directly on a very small segment of our consuming public. It doesn't fall on the poor at all. If you raise diesel, that's a different ballgame altogether. Number two, how do you raise it? We've been talking about sharing of burden between government, the people, and the corporates. At the moment, we have a situation where the entire burden is on the corporates. The entire burden. So the question that then comes up is, how much do you raise prices? How much do you reduce the taxes? And how much do you force the oil companies to bear? Those ratios are critically important in terms of burden sharing. It's not a question of who is getting affected. When oil prices go up by this kind of a magnitude, we are going to be affected. Be clear, what we are talking about is who bears the burden and what is the burden sharing. Why are we not talking about this?
I guess we will. I guess we will know soon enough. I'm completely out of time, but thank you very much to all of you for giving us these different perspectives on an important story. We're waiting to see what actually happens finally with that fuel price hike. Look, at the end of the day, for all of us, that's what matters. The bottom line is going to matter. How expensive is petrol and diesel going to be at the end of the day? Thank you very much to all of you for joining us. And that's it on Left, Right and Centre. Good night.